The title of this S&P 500 analysis video is All In. Are all the FOMO in the market yet? Last week, the NASDAQ 100 and the NASDAQ Composite closed at a new all-time high. So are the FOMO chasing this market up? In this S&P 500 analysis, we're going to analyze the S&P 500 price action and what the media failed to tell you about the job report last Friday and why you should be careful. Now let's take a quick review of the index chart before we analyze the S&P 500 action and the stock market sentiment and the internals. As the chart showed, the NASDAQ 100 and the NASDAQ Composite made a new all-time high, while all the remaining indexes closed higher for the week, but they did not make new high. And here on this weekly S&P 500 chart, we see that the price continued to move up within this megaphone channel. Last week, the price range was relatively large. It has a range of 180 points. And for the week, it gained almost 150 points or close to 5%. It recovered a little bit over 1,002 points or close to 46%. And it is only less than 6% from its all-time high or less than 200 points away from it. In addition, you see that the 10-week moving average is up and also the 40-week moving average is also turning back up. So this is still pointing the longer-term trend to remain in the uptrend. Before we look at the S&P 500 price action in more detail, let's go and take a look at the stock market internals and the sentiment and see what they are telling us. And on this sentiment chart here, the VIX is still pointing on the way down, and it's been hovering between this 20 and 30 area. And the put-call ratio been down at the 0.5 and 0.6 for the entire week. So these two sentiment indicators certainly pointing that there are a lot of complacency, and also the market participant is getting more bullish in this market. So that raises a yellow flag for us to be on the lookout for a sudden shock to shake out some of these bullishness. And looking at the New York Stock Exchange new high, new low, it is still down at this relatively low level here as the S&P 500 pushes up toward the all-time high. So we need to see a little bit more expansion to come into the market if this index is continuing to push toward the all-time high. Otherwise, we need to be cautious about a potential reversal pivot high. And the New York Stock Exchange cumulative advanced decline, the AD line, we did see a new high being put in by the advanced decline. So that is very positive. It indicates that there are more advancing issues to help push this S&P 500 to a higher level, which is good. That indicating the market is building up strength as the index moves toward the high. Now, the new high, new low in the NASDAQ is still pretty relatively low level as the NASDAQ 100 printed a new closing high last week, which is not good. We do need to see an expansion to start occurring in the new high, new low in the NASDAQ if the index is to continue to push into a newer high territory. Otherwise, we'd be cautious about this pivot high here that could signify some sort of reversal. And the NASDAQ advanced decline line, the AD line, did not make a new high as the NASDAQ 100 closed at a new all-time high. But the direction did confirm the move because it did trend higher as the NASDAQ 100 close at a new all-time high. So the move is confirmed based on the way that we look at the advanced decline, the cumulative advanced decline line. So now let's go and take a look at the S&P 500 price action in a little bit more detail. Remember last week, upside scenario, we're basically looking for price to come up to this zone here and then encounter some resistance somewhere around this 3136 area and see a little bit of a pullback. And here's the clip of the scenario in last week's video. We could see a possibility of a little bit of a pullback and maybe come down and fill this gap before it makes its push up to this next zone here between the 3090 and 3136. And as you can see that the index made a move up to this 3136 area, encounter some resistance, and then pull back on Thursday a bit. Then on Friday with the job report saying that it added 2 point some odd million job, and the unemployment rate went down to 13%. But what the media did not tell you and what Wall Street did not react to is the fact that the Labor Department indicated that it made a mistake in counting over 4 million temporary jobs as new job added. And if the mistake was corrected, the unemployment rate would have been 16% instead of 13%. So look out for that, and we'll need to see how Wall Street will reconcile that particular mistake in the coming week. So beware of that fact. All right, so right now we are seeing that the market came up to this 3214 area, which is the support level back here. Now it's turned into a potential resistance. So in the coming week, we're going to see would this market continue to move up. But before it does that, we're basically looking to see would it come back into the zone and test for support before it pushes through and come up to this near the 3259 or 3260 area and into this gap to see would it be able to fill this gap into the 3228 area in the coming week. So that would be the upside scenario that we'll keep an eye on. And on the downside is that if we come down and chop around on this zone and unable to find support, then we'd be looking to see would it be able to come down to this trend line and possibly find support in the trend line. If that is unable to provide some support, then once again, we're going to look for this level here, the 618, somewhere around the 2933, will turn out to be what was resistant to see would this be able to turn into support and get it bounced off of that. Now, also the other thing to pay attention to is its 200-day moving average here as it's trending up. And in the coming weeks, not necessarily next week, but in the coming weeks and in the month ahead, we probably will see this come up and do a golden cross type of print here, and the talking head will be talking about that. Remember, these are nonsense, okay? These are very much of a talking head nonsense, so don't pay too much attention to these things other than the fact that it occurred, and there's a lot of retail investor looking into this, and we probably see a little bit of a price reaction when it does that. But as far as the trend or any kind of technical significance, there isn't any. So let's go and take a look at the S&P 500 ETF, the SPY. For those that are trading this ETF, we're going to take a look at the SPY and see what are some of the price level to keep an eye on in the coming week. Remember last week's upside scenario, we're talking about the price making a move back up to this 308 area into this zone here and possibly come up and encounter resistance somewhere around this 313, this high volume node here. And here's the clip of the upside scenario that we put forth from last week's video. Here are the scenario for the coming week. On the upside is to continue to see this thing move up, take out the 308 and into the 313 before we see a pullback and possibly get down and retest this trend line here. So now the prices essentially came up and went to this resistance area on Friday with the job report that kind of pushed the market up on a gap open. So let me go and update the composite, and also going to remove this composite since right now we essentially have gone beyond this this upward move here. We're basically looking at the possibility of moving back up to the new all-time high. Now, if this start to reverse back down, then I will set up a composite, at this point here to the present. So essentially, you're looking at this composite here. if the price start to reverse back down. But for now, I'm going to go and remove that, and we're just going to take a look at the composite based on this move, essentially from the high of the February all-time high to the present. So now we updated the composite volume profile. You see that the value area high now is sitting somewhere around 320 level up here, and the price essentially came up to that value area high on Friday and encountered resistance there. So we're going to keep an eye on this price action in the coming week. We're essentially looking to see would it come back down and into this zone here, this 308, to see what it finds support and then continue to push up. Remember on the cash index, we're basically looking for this gap to get filled if it continue to push up and get above this this level here. So that would be our upside scenario for the coming week. And for the downside scenario, essentially, didn't find support here at the 308 and come down to possibly test this trend line here for support. And if you can't find support on this trend line, then we're essentially looking for this thing to come back into this 297, 298 area, somewhere into this zone here. Okay, so that will be our basic up-down scenario for the coming week. So in summary, the market is building some strength to help push this market to a higher level. Although the new high, new low is still pretty weak, we need to see more expansion, more stock start making new high. So the market sentiment is showing a little bit of excess bullishness. So we have to be cautious about potential reversal here, a little bit of a pullback, a correction. And it's not going to, ring a bell to tell us to get ready. So we just have to be on the lookout for that. And if it's going to happen, it's going to happen suddenly because it's going to catch the market in surprise because a lot of, market participant is pretty bullish right now. So I'm just going to leave you with this S&P 500 chart here, showing you there is this wedge likely being watched. And we probably see this come down, if we see a little bit of a pullback or get a little bit more FOMO if this break out of this wedge and get into this gap here. So those are the things that we need to be cautioned about is the excess level of bullishness and complacency on the sentiment side. But, the market internal, based on the cumulative advanced decline, is showing some internal strength being built. So just bear that in mind. We're going to see this struggle between the bulls and bears, a little bit longer before this market make a decisive move, either on, to correct some of the recent bullishness at the upside, or just blow this market up and get everybody doing this FOMO thing and chasing after the market. Thank you for watching, and good luck to you, and stay safe.